Attention all seniors and retirees. Today marks a game-changing moment that could reshape how you file your taxes this year. The IRS has officially confirmed a major filing rule taking effect right now, and if you thought tax season was complicated before, get ready for some crucial updates that demand your immediate attention. Whether you're relying on Social Security, pensions, or retirement savings, this new rule could impact your refund, your deductions, or even your eligibility for important credits. Missing this could cost you money or trigger unwanted delays. In this video, we're breaking down everything you need to know, clear, simple, and right to the point. No confusing jargon, just the facts that matter to your financial future. From who exactly is affected, to the deadlines you can't afford to miss, and insider tips on how to navigate this new landscape smoothly, we've got you covered. Plus, I'll share how you can avoid common pitfalls that seniors and retirees often overlook, saving you from headaches and costly mistakes. If you're serious about protecting your finances and maximizing your tax benefits this year, you need to watch this now. Don't wait until it's too late. Hit that like button if you want to stay ahead of the curve and subscribe for more vital updates that keep you informed and empowered. Let's jump right in and make sure you're fully prepared for this IRS shakeup starting today. Now that you know a major IRS filing rule is taking effect today, let's break down exactly what this means for seniors and retirees across the country. This is not just another routine tax update. It's a significant change designed to impact how you file your taxes, claim deductions, and ultimately, how much money you might keep in your pocket. And because this rule starts right now, understanding it immediately could save you from costly errors or missed opportunities. For many retirees, tax season already feels like navigating a maze. You're balancing income from Social Security, pensions, retirement accounts, and maybe even some part-time work or investments. The IRS understands that seniors have unique financial situations, which is why this new rule specifically targets common challenges faced by retirees. It aims to close loopholes that were often exploited, but at the same time, it introduces new requirements that could complicate your filing process if you're not prepared. So, what exactly is changing? At its core, the IRS is tightening verification requirements for certain income and deduction claims on tax returns filed by seniors. This means the days of simply filling out a form and hoping for the best are over. Now you will need to provide clearer proof of income sources and eligibility for credits or deductions. For example, if you've been claiming certain medical expense deductions or retirement income exclusions, you might now need to attach additional documentation. This is intended to reduce fraudulent claims, but it also means you need to be extra organized when preparing your taxes this year. One of the biggest impacts is on the reporting of retirement income. The IRS is requiring more detailed disclosures about distributions from retirement accounts like IRAs, 401ks, and pensions. If you take a required minimum distribution, RMD, or withdraw funds early, you must now clearly report these transactions with proper forms and schedules attached. Missing or incomplete information can trigger delays, audits, or even penalties. So, keep track of every transaction and don't rely on generic statements. The IRS is expecting specific data to match their records. Another critical area affected by the new rule involves Social Security benefits. Many seniors depend heavily on Social Security, but the way these benefits interact with taxable income can be complex. Under this new rule, if you are reporting Social Security income, you must now provide exact documentation that confirms the amount and any taxable portion. This means your Form SSA 1099 will play a crucial role, and the IRS will cross-check your return against this information more rigorously than ever before. What does this mean for you practically? It means before you even sit down to file, gather all your relevant documents. Pull together your SSA 1099, 1099-R for retirement distributions, bank statements, and any receipts or records for deductible expenses. Organizing your paperwork isn't just a good idea, it's essential to meet the new filing standards and avoid back and forth with the IRS. Now let's talk about deductions. Medical expenses have always been a significant deduction for seniors because healthcare costs tend to rise as we age. However, the IRS has tightened rules on what qualifies as a deductible medical expense. You'll need detailed receipts and proof that the expense was paid by you, not reimbursed, and directly related to medical care. Over-the-counter medications, for instance, no longer qualify unless prescribed by a doctor, so don't count those without documentation. If you rely on these deductions to lower your taxable income, pay close attention to these changes. Charitable contributions are another area seeing increased scrutiny. If you donate money or goods to charities, the IRS now requires more detailed records and, in some cases, appraisals for donated items valued over a certain amount. Simply stating donated clothes or gave cash isn't enough anymore. You'll need receipts, bank records, or written acknowledgments from the charity. This change could affect many seniors who regularly give to churches, community organizations, or nonprofits. Keep a dedicated folder for your charitable donations and document every transaction carefully. For those of you who use tax preparers, this new rule places added responsibility on them too. Preparers must verify the authenticity of the documents you provide and keep detailed records for a longer period. This means your tax professional might ask you more questions than usual and request extra paperwork. If you prepare your taxes yourself, the burden is entirely on you to be meticulous. Either way, preparation time will increase this year. If you are worried about the complexity, don't panic. The IRS has also updated its online resources and support channels to help taxpayers navigate these new rules. There are step-by-step guides and checklists tailored specifically for seniors and retirees. I recommend visiting the official IRS website and searching for their Senior Taxpayer Resource Center. This hub includes videos, FAQs, and direct contact information for specialized assistance. Using these tools early can save you a lot of frustration and last-minute scrambling. Now, an important question many retirees have is, how will this affect my refund or the amount of tax I owe? The answer varies based on your individual situation, but generally, if you've been following the rules and keeping good records, the impact should be minimal. However, if you've previously claimed deductions or credits without sufficient documentation, the IRS may adjust your refund or request additional payments. This is why accuracy and transparency are more critical than ever. For seniors on fixed incomes, managing cash flow during tax season is always a challenge. Some might find that these new filing requirements cause delays in receiving refunds. If you rely on a refund for bills or medical expenses, it's wise to plan for a possible wait and budget accordingly. Consider setting aside a small emergency fund in the months leading up to your filing date to cover any unexpected shortfalls. Let's also touch on the role of digital filing. Many retirees prefer to file their taxes electronically to speed up processing and refunds. The IRS is encouraging this, but they've also introduced enhanced security measures to prevent identity theft and fraudulent filings. This means when filing electronically, you might be required to complete additional verification steps. Don't be alarmed. It's designed to protect your personal and financial information. Just be prepared for extra prompts and keep your tax documents handy for reference. For those still mailing paper returns, make sure your forms are complete and legible. Missing attachments or unclear handwriting can cause significant delays. It's a good idea to send your return via certified mail so you have proof of submission and tracking. Now, let's talk about an often overlooked aspect, the timing of your tax filings. The IRS's new rule has coincided with some adjustments to deadlines for seniors and retirees, including possible extensions or earlier submission requirements depending on your filing status and income sources. Stay updated on the IRS announcements or consult with your tax professional to know your exact deadlines. Missing these could result in penalties or late fees. Another important tip is to keep an eye on state tax rules. While this new IRS rule is federal, many states have their own tax filing requirements for seniors and retirees. Some states align closely with federal guidelines, but others have unique provisions that could affect your state tax returns. Double-check your state's tax authority website for any changes this year to avoid surprises. Now, while we're focusing on the challenges, it's also worth mentioning some opportunities this new filing rule creates. By requiring clearer documentation and transparency, It encourages seniors to get organized and better understand their financial situation. This can be a powerful step toward financial empowerment and long-term planning. For example, tracking your medical expenses or charitable donations closely throughout the year means you can budget more effectively and potentially increase your tax savings. Reviewing your retirement account distributions in detail can help you plan withdrawals more strategically to minimize taxes. And staying on top of your filing deadlines and requirements can prevent costly penalties and audits. It's also a good time to revisit your overall financial plan. If you've been delaying changes or decisions because tax filing seemed too complicated, the new IRS resources and your heightened awareness can help you take action. Maybe it's a good year to consult a financial advisor who specializes in retirement planning or senior finances. They can help you align your tax strategy with your goals, whether that's maximizing income, protecting assets, or planning your estate. Let's also talk about technology tools that can help you manage these new filing requirements. Tax software has become increasingly sophisticated and often includes prompts and checklists to ensure you don't miss critical documentation. Many programs offer versions tailored for seniors or retirees, which simplify the process and provide extra guidance. If you're comfortable with computers, these tools can be a valuable aid. Just make sure you choose reputable software and update it regularly. For those less tech-savvy, there are community resources like senior centers or libraries that offer tax assistance workshops. These programs often provide free or low-cost help with filing taxes and understanding new rules. In 2023 and 2024, many of these programs expanded their virtual services, so you might even get help from home through video calls or phone consultations. Another critical aspect to consider is health insurance and Medicare. For many retirees, premiums, reimbursements, and medical expenses play a large role in tax calculations. The new IRS rule also emphasizes clear reporting of health-related payments and credits. If you're enrolled in Medicare or have supplemental insurance, make sure to keep all related documentation, including statements of premiums paid and any cost-sharing amounts. These can affect your taxable income or eligibility for certain credits. If you've recently had a life change, like moving into assisted living, changing insurance plans, or dealing with a new health condition, these factors can influence your tax filing. The IRS wants clear records to ensure you get the benefits you qualify for without triggering unnecessary audits. Speaking of audits, the IRS has made clear that this new rule will lead to more thorough reviews of returns filed by seniors and retirees. This doesn't mean you should be worried or expect trouble, but it does mean you should be prepared. Accurate records, honest reporting, and prompt responses to IRS inquiries are your best defenses. If you receive a notice, don't ignore it. Respond promptly and seek professional advice if needed. Now, what about those who haven't filed taxes in recent years? The IRS has specific rules for late filings and may apply penalties. The new filing rule also includes provisions to encourage seniors who missed previous year's filings to get back on track. There are programs to help with payment plans or penalty reductions for those who act quickly. If this applies to you or someone you know, don't delay seeking help. Finally, let's not forget the emotional and mental stress that tax season can cause, especially with new rules and added complexity. Remember, you're not alone. Millions of seniors face these challenges every year. Taking things step by step, using available resources, and asking for help when needed can make the process more manageable. Now, let's dig a little deeper into how this new IRS filing rule could influence your financial decisions throughout the year. Taxes aren't just a once-a-year event anymore. They impact your entire financial picture, especially when you're living on a fixed retirement income. Understanding these nuances can help you avoid surprises and even identify ways to optimize your situation. For instance, if you have investment income from dividends, interest, or capital gains, the IRS is tightening the reporting on these as well. Seniors often invest conservatively, but any income generated from those investments must be accurately documented. The new rule requires you to report these earnings with precise details to avoid triggering red flags. This means keeping all your brokerage statements and transaction records organized is essential. If you sell investments during the year, make sure you understand how those sales affect your taxable income and how to report them properly. Another important factor to consider is how this rule intersects with required minimum distributions, RMDs, from retirement accounts. The IRS expects strict compliance with RMD deadlines and proper reporting on your tax return. Missing an RMD deadline can result in hefty penalties, up to 50% of the amount you are required to withdraw. With the new filing rule, the IRS is stepping up enforcement and cross-checking distributions more thoroughly. If you're approaching the age where RMDs apply, be proactive. Talk with your financial advisor and plan your withdrawals carefully. We also need to discuss the impact on those who receive income from rental properties or small businesses. Many retirees supplement their Social Security or pension with rental income or side ventures. The IRS filing rule requires comprehensive reporting of all such income and related expenses. You'll need detailed records, receipts, and invoices to support any deductions related to these activities. If you've been lax about bookkeeping, now is the time to get organized. Using apps or spreadsheets to track income and expenses can make tax time much smoother and reduce the risk of audit triggers. Moving on, it's crucial to mention how this rule affects tax credits designed to help seniors. For example, the Senior Tax Credit, Earned Income Tax Credit, EITC, for working retirees, and credits for caregiving expenses are all under closer IRS scrutiny. If you qualify for any of these, you'll need to provide additional documentation to verify eligibility. This could mean proving your age, income level, or caregiving responsibilities with official paperwork. The IRS wants to ensure these credits go only to those who truly qualify, which means being meticulous with your paperwork is more important than ever. Now let's talk about estate and inheritance taxes briefly, because these can become surprisingly relevant for retirees. If you've recently inherited money or property, or if you're in the process of estate planning, the new filing requirements will affect how you report these assets. There's more emphasis on transparency and documentation when it comes to trusts, gifts, and inheritance income. This is a complex area, so if you're dealing with these issues, it's wise to consult with a tax professional who specializes in estate taxes. One thing I want to highlight is the importance of communication. The IRS is increasing outreach efforts to seniors, including personalized letters and reminders about these new filing rules. If you receive a letter from the IRS, don't ignore it. Often, these notices are simply reminders or requests for additional information. Responding promptly can prevent complications or escalations to audits or penalties. If you're unsure about the notice, seek professional advice. Speaking of professional advice, I can't stress enough how valuable it can be to work with a tax preparer or advisor familiar with senior tax issues. The new filing rule adds layers of complexity that can be overwhelming. A knowledgeable advisor can help you navigate requirements, maximize deductions, and avoid common pitfalls. If cost is a concern, look into local nonprofit organizations or community programs offering free or low-cost tax help for seniors. Technology continues to be a game changer in this space. The IRS has enhanced its electronic filing system to better handle the new filing requirements. If you're comfortable filing online, this can speed up your processing time and reduce errors. Many tax software providers have updated their platforms to guide users through the new documentation demands step by step. Take advantage of these tools if you can, but make sure to keep paper copies of everything you submit. We should also talk about the role of family and caregivers in tax filing. Many seniors rely on family members to help organize documents or even prepare their taxes. With the new IRS filing rule, it's vital that everyone involved understands the increased documentation needed. This can reduce mistakes and ensure timely filing. Encourage open communication with your family or caregivers about what documents you need and when. Let's not overlook the importance of financial literacy in all this. Staying informed about changes like this IRS filing rule can empower you to make smarter financial choices year-round. There are plenty of free resources online, including IRS webinars, community workshops, and educational videos specifically designed for seniors and retirees. Taking time to learn about these topics can save you money and stress. For those managing multiple sources of income, this new rule highlights the need for a comprehensive financial review. Sometimes combining Social Security, pension income, investment earnings, and part-time work can push you into a higher tax bracket than expected. Being proactive by adjusting withholding or making estimated payments can prevent a large tax bill at the end of the year. Let's pause to talk about scams because, unfortunately, scammers are quick to exploit any tax-related changes. The IRS will never call, email, or text you demanding immediate payment or personal information. If you get suspicious communications claiming to be from the IRS, hang up and report them. The new filing rule has prompted some scammers to try to confuse seniors with false information. Stay alert and always verify directly with the IRS or a trusted tax professional. Another topic worth discussing is the importance of reviewing your filing status. Sometimes seniors continue to use a filing status that no longer fits their circumstances. For example, widows or divorced retirees might qualify for more beneficial statuses like qualifying widower or head of household, which can reduce taxes. The IRS filing rule doesn't change the basics of filing status, but it's a good reminder to review your situation annually and choose the option that maximizes your benefits. We should also consider the implications for retirees who split their time between multiple states or live part of the year abroad. The IRS filing rule applies to federal taxes, but many states have their own filing rules and residency requirements. If you're living in a different state seasonally or spending extended time outside the U.S., you need to be aware of how this affects your tax obligations. Some states have reciprocal agreements, but others require full filings regardless of part-year residency. This can complicate things, so plan accordingly. Before we move on, I want to highlight some of the new IRS tools available in 2026 to help you navigate this change. The IRS has launched an updated online portal specifically for seniors and retirees that includes FAQs, instructional videos, and interactive guides. This platform is designed to be user-friendly and accessible even for those who aren't tech-savvy. Using this resource early can reduce confusion and help you prepare your taxes accurately. Finally, one of the best ways to handle any tax change is to plan ahead. Don't wait until the last minute. Start gathering documents, reviewing your income sources, and organizing receipts now. Mark important deadlines on your calendar and consider setting reminders for quarterly check-ins if you have complex finances. The more prepared you are, the smoother your tax season will go. Navigating tax changes like this new IRS filing rule can feel overwhelming, especially when you're managing retirement, fixed incomes, and a whole host of financial responsibilities. But knowledge truly is power. By staying informed, organized, and proactive, you can turn these changes into opportunities to protect your finances and even maximize your benefits. Remember, the IRS is updating its processes to make filing more transparent and fair, but that also means you need to be more diligent than ever. Use the resources available, don't hesitate to ask for professional help, and always keep your personal information secure. Your financial peace of mind depends on it. As we move through this tax season, take control of your situation, plan carefully, and approach your filings with confidence. These steps will help you avoid costly mistakes and ensure you get the full benefits you deserve. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss important updates that affect your financial future. And share this with friends and family who might also need to know about these crucial changes. Thank you for watching, and here's to a smooth, successful tax season ahead.